Hello, chart watchers and Decision Point faithful. Welcome to this Monday, October 18th Decision Point show. I am Erin Swenlin from DecisionPoint.com. My father isn't able to join me today, but we'll see if we can't get him back here next Monday. We've got lots to cover. As always, I'm going to go over our SPY and indicator overview. We did have a climax day last week, but it does appear we may have called it an exhaustion when it was actually an initiation. But I'll go through some of the reasoning we had when we called it that, and we will look at what's going on in the SPY right now, which is pretty good, honestly. Almost all of the sectors are beginning to show relative strength. So I want to go through some of our sector charts on DecisionPoint.com. We have under the hood indicators that I think will be interesting to look at as far as some of those sectors that are starting to show some relative strength, and really looking at some of the ones that already have relative strength. I'm going to then go into the gold miners chart. We'll look under the hood on gold miners and see if they still have some more room to run to the upside. I'm going to go over uranium, lithium, and rare earth metals. I want to look at all of those for you. And then if I have time, I'm going to take a peek at coal, which is starting to break out again. And then we'll go and take a little quick search for a diamond or diamonds of the week with a scan. So we've got lots to cover. As I said, before I do get started, I do want to remind everybody that we do have a free live trading room on Mondays at noon Eastern. And again, it is free. So you can sign up for our free newsletter on our website, and you will get the recordings from those Monday trading rooms. And you'll additionally get the information on how to sign up to join me in the trading room. It's been really active as of late. Lots of people wanting to see what we have to say about their stocks as well as what's going on in the market. So definitely want to take a look at that. All right, so let's just dive right on in and look at some of our indicator charts. And like I said, I'll discuss a little bit about this move we saw on Thursday that we read as being an upside exhaustion, but clearly it turned out to be more of an initiation. It'd be great if we could call them the right way every single time, but not always easy to do. So right now I'm looking at the SPY 5-month candlestick chart. A couple of really interesting and new things going on. We had an intermediate term trend model silver cross buy signal on the SPY. A silver cross is a 50-day EMA upside crossover. Everybody's mostly familiar with the golden cross, but we have coined the silver cross as well because of some of the indicators we've come up with, which I'll show you momentarily. Right now, though, I'm seeing a bullish engulfing candle. I was expecting this to possibly turn out to be an exhaustion gap, given our upside exhaustion climax, or at least that's what we were reading it as. It still could be, but we usually look for the climaxes to resolve in, about, 1 to 2, 3 trading days. And so it does look like we got that upside push. Now we have that bullish engulfing. We could be looking at a little bit of a reverse island coming up, but I have to say, when you look at an RSI that is positive and not overbought, you can see the PMO is now on an oversold buy signal headed toward positive territory. All of that looks really nice. The VIX, I'll talk a little bit more about the VIX shortly, but it had a lot to do with why we were reading last Thursday's climax as an upside exhaustion. We look at the 1-year daily very quickly here. You can see that falling wedge. We got the breakout as expected from the falling wedge. Does seem like it's, had that big move at the end of last week, and now we might be just sort of digesting that move a little bit, but still closed up almost 1/3% today. Stochastics are looking very healthy for the SPY right now, still rising, definitely in overbought territory. But as most people who are familiar with stochastics, we can see stochastics stay in overbought territory for quite some time. The concern comes when you start to see the negative crossovers and a concerted thrust to the downside. And right now we still have a thrust to the upside. And we're not seeing anything turning down right now. Total volume looks like we came in just a little bit lower than we had on Friday. And then again, here is that VIX. So I'm going to take us to our climax chart so I can talk a little bit more about last Thursday's upside climax. So climax days, this is something that is unique to DecisionPoint. What we do is we look at net AD breadth, we look at the VIX, and we look at volume ratios. Our primary now indicator for an upside or downside climax day is based on these volume ratios. When you get the up-down volume ratio above 3 and the S&P's ratio above 3, typically that's what we'll mark as a climax day. So we got that climax day and the VIX was very, very close to puncturing the upper part of its Bollinger Band. Typically, when we get those punctures or those moves right up against that upper Bollinger Band on our inverted scale, you're going to see price generally either pause, maybe chop around a little bit, or as you can see back here, a lot of times they'll come you'll have that puncture and then you'll start to see a decline after that. So that was really what was on our mind right here. I think is a really good example of what we were thinking, because we had all of this time here above that above the EMA. We had all of that above the EMA, but when it got to the top, that's when we got the move back down to the downside. And so it seemed to us that this was a thrust to the upside, but more than likely an exhaustion. As I said, it looks like it turned out to be more of an initiation rather than an exhaustion. And like I said, part of our reasoning was because of the VIX. And on Friday, it punctured that upper band. We didn't get climactic readings. But my thought was that we were punctuating the end of this exhaustion, possibly going to see more sideways movement and possibly a pullback toward these EMAs. But like I said, things are looking pretty healthy under the surface here. Short-term indicators, we're looking at the Swenlin trading oscillators. Now, when I was looking at this chart beforehand, we had a negative divergence going on with these indicators. We still kind of have one over here on the STOV, but we don't anymore on the STOB. And these readings are rising. They're somewhat overbought. I mean, I think you could call the STOB overbought, but we don't have really that seriously overbought, extremely overbought conditions here. One of the really nice things on this chart that I was looking at this morning when I did your daily 5 was that the percent of stocks above their 20 is now at a very healthy 73, 74%. And the amount of PMOs rising right now in the S&P at this point is 80%. We need to have that rising momentum among the members of the index that you're looking at in order to see a nice strong foundation for price to move higher. I haven't seen anybody talk about it, but I actually have been looking at a possible reverse head and shoulders formation here on the SPY, and the breakout that we got on Thursday actually broke through that confirmation line somewhat. And then on Friday, the follow-on definitely showed us a move that broke above the confirmation or head neckline of that reverse head and shoulders. So everything is looking very bullish right now. It's hard to get negative on the market. Our indicators just are looking pretty good right now. What can I say? Intermediate term indicators also looking good and rising. We still don't have positive readings just yet here on the ITBM, but you can see we are seeing those readings rise. And now on the ITVM, we are seeing some positive numbers and again, continuing to rise. This is really what I like to see is the percent of crossover buy signals within the S&P. So the last one we looked at was telling you how many have rising PMOs or rising momentum. This is telling us how many actually have a PMO above the signal line. And right now that's at 63%. I think that's a pretty good number. And it doesn't look like it's ready to pull back just yet. Of course, you can see some spiky movement on this particular indicator, but overall, I think that looks very positive. And while it is somewhat near-term overbought, you know, when you're looking at a reading in the mid 60s, it's hard to really consider that as an overbought reading because there is so much room for it to move higher, and we have seen it move much higher before. I'm going to look at our bias assessment. And all of these charts I'm going over, I cover every single market day in the DecisionPoint alert. So you can get your to the minute, right after the close, information on all of this every day, if this is something that you're finding helpful and useful. So just check out DecisionPoint.com's DP alert. Right now, there you go, is our silver cross index. And remember, we said that a silver cross is a 20, 50-day positive crossover. And we count, the index tells us how many of the S&P 500 have a 20-day above the 50-day. Right now, 47%, so we have less than half. But notice the positive crossover that we got last week, it's still rising. And then when you look at participation under the surface, we have those 73% with price above their 20, a little over 60% with their price above their 50. And that tells us that this Silver Cross Index number can continue to rise because these percentages are higher. And when you're talking about getting to a Silver Cross, price has to be above both the 20 and 50-day EMAs. When it's above both, that's what's going to bring that 20-day EMA above the 50-day. That's what's going to have the stocks able to hold those silver crosses by having their price above 20 and 50-day EMAs. So seeing a nice high percentage here in comparison to the silver cross tells me that we're going to probably see that silver cross continue to move higher out of very oversold territory. So that is a positive. I do notice that we pulled back just as slightly. Well, that was an old reading. Some of these participation readings haven't been updated yet, but these were the readings as of Friday and they were already rising. Given we had a move to the upside, I am pretty sure we're going to see even better percentages on price above the 20 and 50. Let's go ahead and look at Bitcoin. And Bitcoin broke above overhead resistance at 60,000, and now it looks like it's digesting that move. The PMO is still looking very strong. Stochastics, while they do look like they're pointed downward, are still moving sideways in that overbought territory, holding those conditions, and certainly could support higher prices on Bitcoin. The RSI is overbought along with the stochastics, but still, given this nice vertical move, almost rising trend, I would expect to see after another consolidation phase, another move upward. I suspect that we are ready to move to new all-time highs for Bitcoin right now. Let's look at the dollar. You can see that the dollar is starting to fade here. Certainly, we've got a PMO crossover sell signal. It looks like that might have come in today. And stochastics are still moving lower, although we see a little deceleration, so that's not too bad. And volume was pretty high on today's move, but it was really almost unchanged today for UUP. It's holding above this area of support. It also happens to align with the 20-day EMA. I suspect we could probably see the dollar moving sideways, but we need to be prepared for it to possibly drop below this area of support and come back down and test the bottom of this rising wedge formation. Rising wedges are bearish, and this is the one-year bar chart here for UUP. And you can see that it is in a very large rising wedge pattern. So looking at this, you can see that after these tests, and in this case, 2 tests of the top of this wedge were unsuccessful, and now we're heading back down. More than likely, we're going to see the bottom of this wedge tested again, this rising trend. And I don't hold out a lot of high hope for the dollar at this point. The RSI is still positive, but like I said, we've got a new PMO sell signal and stochastics are pretty much falling out of the sky. So I'm not looking for a reversal on the dollar just yet. We look at GLD. Carl and I have been watching this double bottom formation. And, we had the big move up and then we got that big gap down on Friday. And we did close lower on gold by about 0.25%. But my thought is that we still have this short-term rising trend intact. It isn't so intact right now. So this double bottom could end up disintegrating. And certainly if price moves below 164, I would consider that pattern scuttled. And given these negative indicators, a negative RSI, a PMO that's flattening beneath the zero line, and now seeing stochastics turn down, I think that that rally in gold was not an aberration necessarily, but I think that that is done for a while. More than likely, we're going to be back into those doldrums of trading back and forth on gold above this area of support. I'm going to just show the 1-year premium. This is, let's see, the chart is up to date, actually, except for sentiment. Our sentiment usually doesn't come in until much later in the afternoon. You can see, though, that as far as sentiment goes, the discounts right now are very heavy, and that tells us that people are still bearish on gold. You can see that that rising trend on dollar gold is still mostly intact here. So, the double bottom, and you'll notice, well, wait a minute, how is that a double bottom? Well, the close on that big bar was right up here, and there was another close here. So this is something that Martin Pring has taught me, and it's called a Pinocchio bar. And it can really obviously skew what you're seeing on the chart. And a lot of times, as he said, it's like Pinocchio, it's probably not telling you the truth. It's giving you a false sense of either security or a false sense of doom, if you will. And that was really the case here. We got that huge rally down, decline down. And then we touched on this area of support. And then we got price back up on dollar gold right around where this bottom ended up forming. So we would still consider this a possible double bottom formation. You could look at it as maybe a reverse head and shoulders if you want to count that low. But in any case, these patterns are bullish, and so they do suggest that gold should turn itself back around. But I have to say, seeing stochastics looking as they do, I'm not thrilled with that. But we have high discounts, like I was saying, and that tells you that people are very bearish on gold. Sentiment being contrarian, we want people to be very bearish on gold. And that usually will spur, you can see back here, that will usually spur a rally out of those overbought or very bearish sentiment, I should say. You can see we had that same situation back here before the rally. So we're lining up, we're setting up for a nice rally in gold, but it just doesn't look like it's ready to materialize. I'm going to cover gold miners shortly, but we'll leave that until a little bit later. Let's look at crude oil. This is USO, and we did see it down a third of a percent today, but really the indicators are not showing any damage. The steeper rising trend line is still intact despite a pullback today, and the PMO is still rising nicely. It is on the overbought side, which does worry us a bit, but so is stochastics, and you can see that stochastics have remained overbought since September. So I suspect we're going to continue to see these overbought conditions. As with everything, you're going to have these periods of rally and then digestion. Looks like we might be in for some more digestion. That's a bearish engulfing candle. So we would watch to see if we lose this short-term rising trend. Seems like we could certainly do that. That'll, of course, have some implications for the energy sector itself. TLT, 20-year bond ETF, forming a bit of a flag right here. And the stochastics are still looking positive. And you can see that today, we still don't have a crossover buy signal yet on the PMO, but we're getting very, very close. The question is yields and rates. And at this point, I don't see any huge damage on rates. You can look just down here. I'm going to show you with my inspect tool going on. So if you look at where the 20-year rate is bounced, it's bouncing right off of this very, very, very strong support. And so I'm expecting rates to probably continue higher. That's going to put the damper on this bonds rally for TLT. So it's, it is a positive flag, but we have this very strong overhead resistance. It's struggling at that 50 and 200-day EMA, struggling to get really above and trade above that 20-day EMA. Things are looking a little bit weak here when it comes to bonds. All right, so next up, I will cover gold miners, since that is also one of those items we cover every market day in the DecisionPoint alert. So you'll always have your finger on the pulse of gold and gold miners. And you can see a really strong rally for gold miners, hit overhead resistance, and we're now starting to see them pull back just slightly. It looks to me more like a flag formation. I would say that after breaking out from this falling wedge, it's really due to continue higher. And when I look under the surface here, it looks really good. Coming down here and we look at participation in the gold miners, and you can see that we have 100% of the stocks above their 20-day EMA. We have 3/4 of them with price above their 50, and the golden cross is at a very tiny 13%. So that tells me the silver cross should start to see some very nice improvement. That's bullish for gold miners. And the fact that we still have very, very strong participation, I think also speaks well for gold miners moving forward. So let's look at some of these sectors. And what I'm going to do, this is our sector chart list, but I first want to look at this in a candle glance, just so we can get a feel for what's happening across the board on these sectors. All right. So one of the things we noted on Friday is that really, when you look at all the sectors right now, every single one of them are starting to show positive momentum. Even XLC, it's been in a pretty solid intermediate term decline, but we are starting to see a little bit of movement to the upside on momentum. I have to say, seeing price stuck below the 20 and 50 doesn't make that area that exciting to me. Healthcare is finally starting to see a little bit of positive momentum. In this case, we still do have that declining trend, and price still hasn't really gotten above the 50-day EMA. So while it's showing some new strength, both of these, the price action is still really not calling for a big move to the upside on these, but it does tell you that right now the wealth is being shared across all of these sectors. Notice the big breakout in consumer discretionary, and that occurred on Friday as well. My concern at the time on Friday was that, we still were having some issues with supply chains and all of that, but now that actually seems to be working in the favor of retailers in that everybody's Christmas shopping early. So this sector could be more of a one to watch. My one to watch was real estate for this week. New PMO buy signal, price above both the 20 and 50-day EMAs. Looks like it's ready to make a move to test its all-time highs. So I really like the setup for real estate right now. But now that we've had trading today, you can see a really nice improvement here on XLK. Let's go ahead and look at that chart a little more closely. Obviously the QQQ, NASDAQ, they trace very much toward the technology sector. That's where a lot of the companies are from. So knowing what's going on under the hood on this sector, I think, is very important. Today, we did just see a silver cross. So we have an intermediate term trend model buy signal now coming in on XLK. We'll be updating our sector scoreboard for tonight's DP alert. You can see the PMO is on a nice buy signal. Silver Cross kind of flattened out here, and it's at 44%. But as we were talking about with these indicators and the percentages and participation, we have 80% of technology stocks with their price above their 20 and 60% with price above their 50. And that is higher, much higher than the 44% reading on the Silver Cross. So I would start looking for the Silver Cross. It's flat right now, but I would look for it to start improving here. We do want to see some outperformance, and we're starting to get that on XLK versus the SPY. This could be a really interesting area of the market going into this week. Let's go back. Materials are still looking quite good, and I want to focus in on materials here because I am bringing in some interesting charts to discuss in that area before we leave. Falling wedge-ish, well, more of a descending triangle, but it looks like we're going to try and get the breakout here. Not really happy to see that it pulled back today at this area of, at the declining trend line, but we still have positive RSI. Look at that PMO on a oversold buy signal, no twitch. It's just interested in staying up. And then notice today we did get a Silver Cross Index positive crossover for itself. 25% have a 20 above their 50, but 82 and 75% have price above their 20 and 50. That number, that index is going to continue higher, and it's going to continue to improve. You can see that materials have been outperforming since the end of last month. All right, I have a few more minutes left. So let's go ahead and look at uranium. So uranium had a giant pullback, and it hit this area of support. It failed at that area of support, but you can see we still had a support level here at that May high. That's where it held on the 50, and it does appear to be moving higher. We had a pullback last week after that big move to the upside. So at the end of the week, we pulled back to that 5-day, and now it is back moving up. It is above this area of overhead resistance. And as I said, I like the look of the indicators. Stochastics have moved, they're moving sideways now. So we are overbought with those, but they still look good. I still like uranium. Lithium is also one of the big movers for the day. Another one that started its rally last week, and we're seeing a continuation. And in fact, with lithium, really like today's move. It is breaking out above overhead resistance, really strong RSI, strong PMO on a buy signal. And like I said, stochastics are a bit on the overbought side, but certainly not turning down, no negative crossovers. It's looking pretty healthy, and you can see how it is outperforming. And then finally, the rare earth materials, another good look, another rally last week. We're seeing the continuation. Right now, it is hitting some overhead resistance, but I'm telling you, you look at an RSI like that, and you look at a PMO on a buy signal that's just gotten positive, I would look for even higher prices here on the rare earth metals ETF. And then finally, just to close out the show, let's look at coal. And you can see that after some consolidation, forming a beautiful flag, today we got the breakout execution of that flag. Bull flag tells us that the length of the flagpole is what we should expect on this breakout. That gives us a really hefty possible $100 move higher on the coal total index. And if we're going to look really quickly here at a stock, here is one stock right here in the coal sector. It's still pulled back, but it's starting to make its move up, and it should follow suit with the rest of it. That's all I got for you. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.